So this would be a pretty simple one here. He wants to know, how to close out a trade when an indicator, crosses a certain value level here, right? So in this case, it's going to be the Williams %R indicator here. So if we're in a short trend here, or a short trade, I should say, in a short trade, if the Williams %R crosses the -25 level, then he wants to close out the trade there. All right, and to get BlackBird up and running, we're going to go into the strategies window. And I already have BlackBird on this chart, so I just need to enable it. So enabling strategies is something that's unique, that sets them apart from indicators. So, all right, so just click OK. All right, there we go. So BlackBird's up and running. And so I'm just going to use the order settings button down here, and that opens up the BlackBird interface. So the type of entry order here doesn't matter. So I'm just going to use a simple market entry order. So the way I'm going to accomplish this, basically the way we're going to analyze the Williams %R indicator is in a trailing rule here. We'll either need to have a profit target created or a stop loss created here. So I'm going to use the stop loss here. So let's see, I'll just use a typical standard like 10 tick stop loss here. And of course, you can always adjust this if 10 ticks isn't enough. We could increase this to 15 ticks or whatever. So once we have a stop loss started here, then we're going to switch over to the trailing actions tab here. And this is where we can create our custom trailing rules. So we're going to change the mode over to custom, and then add a trailing rule down here. So, all right, so let's see, we're gonna exit at, this question is actually a continuation from yesterday's Bloodhound workshop here. So there was some missing information here on the screenshot. So yeah, so exiting at the -25, as I mentioned, was for a short trade. So if it's in a long trade, then I'm pretty sure David wants to exit if the indicator goes down to the -75 level down here. So, but we don't have any examples of a long trade on the screenshot here. So obviously it doesn't really make sense with what we're seeing in the indicator, but that's how it is. So exit along if the Williams gets down to -75, exit a short if it gets up to -25. There. So let's go back into our trailing roll here. All right, so exit at -75 for a long, or -25 for a short. There. Stretch that open a little bit more. Okay, so we're going to use one of the trigger conditions to do this. So we're going to use indicator value. Pretty simple, straightforward. This indicator value trigger is comparable to Bloodhound's threshold solver. Basically you're looking for an indicator threshold value or level to trigger something. Right. So let's put that in there. Let me open this up a little bit more. There. Okay, so first thing, let's plug in our Williams R indicator. And open that up. There. All right, scroll way down to the bottom. And there we go. There's our Williams R. And of course, be sure to change the period if necessary, right? So if you're using something other than a 14 period Williams R, make sure you change that right there. So, and there's only one plot for this indicator, pretty simple. So nothing to do there. All right, there we go. So we have our indicator in there. And so now we put in the values here. All right, so let's see. So if we're in a short trade, we're looking for a value greater than -25, right? So the Williams R is an indicator that's kind of has its output reversed, you know, goes from 0 down into negatives. So basically, if we want to exit a short, we're looking for a greater value than -25. So this is, you know, not typical of most indicators here. So we're going to have to change the short mode to greater than or equal to, right? There you go. Yeah, so greater than or equal to -25 here. And then the long mode is going to be the opposite here. Or I'm sorry, not long mode, but long trade. So it's do less than or equal to, and this is going to be -75, like that, right? So there we go. So again, you know, if to kind of figure this out, to figure out, you know, whether you need to be greater than or less than, you know, again, just kind of look at your indicator, and again, let's zoom in there. There we go. Yeah, so we can see that the Williams %R, you know, it starts at 0. 0 is the greatest value that this indicator outputs, and it goes down into negative numbers, right? So that's why in the trailing rule we kind of had to set these values up kind of backwards of any of other typical indicators, right? So okay, so let's get back to this trailing rule here, yeah, so the action, we don't really need to do anything. We're just going to move the stop loss into the last price, and that'll get, basically the market will hit that stop loss, fill it, and then of course close out your position. And so there we go, we're good to go. So that was it. Pretty simple there, David. So the key here to getting this working was using the indicator value. So let's do, I guess while I'm waiting for some other questions to come in here, we'll just test this out quickly. So let me, there, let's get rid of that. Open this up a little bit more, and let me put the Williams indicator on the chart. There we go. All right. Yeah. All right. So the Williams is yeah, it's moving up. So let's open up a long position here. There we go. And oh, I don't have my simulated data feed going here, so I won't be able to control the market. So give me a moment here. Let's switch data feeds over. Disconnect that. All right, connect up our simulated. All right, and next step, get BlackBird up and running again. Hit the enable option there. All right, we can just ignore that. And okay, let's get into a long position again. There we go. All right, so now let's see, let me close out this bar. Yeah. And my goal is to get the Williams indicator down here to the -75 value, and we'll see the stop loss will move up and close the trade out. Yeah, the indicator may not move down as quickly because, oh, there we go. Perfect. It just closed us out, and there's the little message from NinjaTrader. So, all right, there we go. All right, let's see. So Dean is asking, would moving the last really ensure you're getting out? Yeah, good point, Dean. I know in the past, back when the markets used to be really volatile, I used to kind of suggest that you could take this move to last and then also pad it with a few extra ticks just to ensure that, right? But, as long as, a stop loss is moved to where the market is currently trading or past that point, right, then stop losses are guaranteed to get filled. So they're not guaranteed to get filled at any particular price. That's not how stop losses work, but it is guaranteed to get filled and exit the position, which is the same thing as just hitting the close button. When you hit the close button or the cancel button, or even if you go to like your positions tab, and you right click and hit flatten everything, that's submitting a market order to close out your position. So basically that is what this trailing rule is accomplishing by moving your stop loss into the last price or into the market with a few extra ticks. That's the same thing as just doing a flatten everything, and you just kind of get filled at wherever the market happens to be. So yeah, so there you go. So yeah, so if you're not sure about that, then so even if let's say here, so let's kind of cover the two scenarios. So let's just say I leave it at exactly the last price. All right, so we're in a long trade, right, and our trailing rule executes. So the stop loss moves up to where the last price was, but then the market takes off without you. Big deal. You're still in a profitable position there, right? Because if you're in a long trade and the market keeps moving up and never fills your stop loss, that's not a bad thing. that's a good thing. So, right. So there's that. But then but let's say if the market doesn't keep moving, in the direction of your trade. So let's just say, stop loss moves up. Bingo. So let's say the last price was up there, but the market's down here. Well, again, you're filled and you're flattened, right? The trade is filled and flattened there. So it'll be flattened at wherever the market currently was when that stop loss got moved. So